Welcome to Market Pulse. We're going to look through the main markets as well as crypto to understand where things could be going today. In the last trading session in the US, all sectors were down 0.48%. Consumer discretionary did the best, energy did the worst. The standout performer was Amazon in consumer cyclical. When we look at the weekly performance, Google was down 9.9%. When looking at the monthly performance, Microsoft was up 5.16%, Exxon down 11.65%, and Chevron down 15.38%. Please be aware, scammers impersonate every single person they possibly can. The only things that I'm involved with on the YouTube page are on the About page. They're just those links there. Please don't give anybody your money to manage on your behalf. Learning is earning. The best thing you can possibly do is to gain the skills to manage your own money. Since the Hamas-Israel war, we've seen the VIX, the fear gauge of the main market, continue to increase. Also, the flight to safety, which is gold, has done incredibly well, as has Bitcoin. Bitcoin is that blue line across all of these charts. The one thing that we want to keep our eye on, and a lot of people don't look at this, are junk bonds. JNK junk bonds give a very powerful risk-on or risk-off sentiment indicator. We've seen the major indices come down recently. The Nasdaq is no exception. We'll look at the S&P in a minute. We're starting to see stabilization inside the bond market after that initial capitulation and trying to revert to normalistic price behavior. We've also seen a flight to safety in terms of the DXY. And you've seen over the past week, those oil and gas companies have been coming down, as has oil. And we'll look at oil as well. It's important to get a context of different charts, but the real value when it comes to trading and investing is understanding the Tier 1 charts. They are the engine of financial markets globally. The Tier 2 can be used to stack probabilities, and the Tier 3 as well. Price is always moving in a wave between CTKS structural levels. They're very special. They're drawn from total market structure. We're going to start to look into those now. Looking at the S&P 500, the CTKS method, which draws up total market structure or CTKS structure, analyzed the S&P 500 over 55,800 days and discovered these two very, very important levels. There's a massive amount of smart money support between 4,088 and 4109 in the S&P 500, and we saw the S&P 500 in the last trading session tap that area. That's a huge amount of structural support. The second zone is between 4161 and 4192. These two zones have been assessed through the CTKS method as being incredibly strong zones. The one above is a structural resistance zone. The one below is structural support. Inside markets, price is always moving between these structural zones, and if we see price continue to come down into here, we would expect it to be caught and to rebound up to the 4161 level. If it stops short of that and rolls over, we could expect more negative momentum. But if it comes up, starts to retest this, we could see upward positive bias. And that will throw the market off guard because everybody is expecting the markets to tank. Markets tank to structural levels and then rebound. That's why it's really important to know where they are. We can see that over the past week, the oil, the energy and gas companies have been having a really tough time. We can see that oil came up and then retraced. Oil has been trading for nearly 60,000 days, and when we analyze it with the CTKS method, which measures total market structure, what do we determine? Let's just pop on the indicator to start with. We determined that oil had a very strong structural resistance level at 85.84. It had one above at 85.90. This caused price of oil to just reverse from those levels. We can see that there's a structural now resistance level at 85.19. If the bears continue to maintain control, we should see a retest or just a decay down to this 84.09. We're starting to see structural levels of support. These act as safety nets. Safety nets capture price and rebound it up to the next SL. I'm very grateful to everybody who comments and watches. Thanks so much for being here. We have an amazing global family. If you're liking the content, please smash that like button and don't forget to subscribe. All financial markets are all about risk. One of the most risk-sensitive asset classes is Bitcoin, and we can see positive momentum inside Bitcoin across the weekend. As Bitcoin moves, so too do the alts. And we've seen Ethereum come up. We've also seen Binance Coin, XRP, Solana, ADA is doing really, really well. Doge and Tron come up. This is to be expected. As Bitcoin moves, so too does the entire crypto market, but not the same percentage. CTKS structure is incredibly valuable. It gives you a concept as to where price is heading. We can see previously that we had this amazing mass of structural resistance levels starting at this around 35,189 level and going up to 36,000. That was a distinct problem for Bitcoin. Even though we had such fantastic news in the market, CTKS structure overrides. It's a rule that we understand. This means that if you've got a massive amount of structural resistance inside a market, it will stop price and reverse it. And also, as we're starting to see with the S&P 500, if you've got a massive amount of structural support, it will also do the opposite. It will stop it and reverse it. Let's zoom in to current price and see what Bitcoin is up to. When you look at price like this, it looks very random. I'm going to show you a secret. We're going to mark up Bitcoin with the CTKS method over 5,000 days worth of data and see what the smart money sees. When people first start in financial markets, price movements look just incredibly random. It's like, why is price doing this? Why did it come up to there? Why did it go there? Why did it go there? What you actually find over time is that you need to understand the structural levels. We saw a structural resistance level at 34,433. That's why price came up to here and then rebounded downwards. Resistance always repels price. Support repels price the other way. What you can also see is when price comes up to a structural level, if it's going to have an opportunity to get through it, it usually wobbles around that structural line before seeking to make its way to the next structural line, which was in fact here at 34,717. When it reached this structural line, what did it do? It did the same kind of thing. That's exactly what resistance lines do. They rebound price downwards. Now, what does this mean for Bitcoin? It means across the weekend, in dire situations where everybody is talking about a 1929 crash, Great Depression breaking out, all of that kind of, well, I must say nonsense, because what happens when price comes down, everybody gets incredibly negative, and when price goes up, everybody gets incredibly positive. The concept is price is always moving up and down, up and down. It's just moving in a wave between these structural levels. You just need to know where they are and you'll know how safe or how unsafe you are. Don't forget, these lines that I'm showing you here and here are formed out of 5,115 plus days of data. That's what the CTKS method actually does. It analyzes where these lines are. These are the lines that smart money looks at, and you can see how effective they are. They play out all the times in terms of support and in terms of resistance. It's always the case. Look to structure first. What is the rule for trading structure? It's really simple. If it doesn't go above, it's going to the one below. What are these lines actually called? Because they're super support and resistance lines. They're called Stanfield levels or SLs. Price is always moving SL to SL. Where could price be going from here? Of course, if we challenge this 34,717 level of resistance, this smart money level here, if we manage to get above that, we're heading in towards the 35,205 level. If we can't get above, we're going below. Where's the one below? It's at that 34,435. If we can't hold on to this one, where are we going? We're going to the structural level below at 33,795. It's realistically that simple. We have upward price momentum, which would suggest that we're going to consolidate around here, then try to retest this 34.7 level and make our way up to the 35,200 level. If that doesn't happen, we've got three-dimensional risk management. We understand where the safety nets and where the ceilings are in terms of price action. Market Pulse is all about understanding how all the markets move as one. Every investor and trader, no matter what market they're in, they're just chasing a return. And we can see Bitcoin is slightly up. That's pulling all the market up. Solana is doing quite well. We'll have a look into Solana. Some of the standouts as well, Aave and SHIB. If you're in the crypto market, it's important to check the relativity between Bitcoin and the other alts. If the other alts are up more than Bitcoin, that shows strength. And if they're up less than Bitcoin, that does show weakness. Of course, just always remember that the stable coins USDT and USDC are exactly that. They're stable. They're supposed to maintain their dollar peg, but you can see they wobble around anyway because stable coins are not stable, and they never were. Turning to the greatest gainers, we can see Gala is out in front leading the pack, followed by ICP, Axie Infinity, Sand, Mana, Aave, Render, BTT, and DYDX. The greatest losers over the past 24 hours, top 100, Stacks, Floki, Peppy, Neo, Sui, GMX, Rune, XDC, and Maker. Across the weekend, we've seen a lot of liquidations, nearly $55 million worth, with the majority being short liquidations. We're seeing this inside the crypto market. It's likely we'll see it inside the main markets too. As soon as the majority of people expect that things must go a certain way, they typically reverse and just mystify people. What you can just assume from this, the crowd is generally wrong. Counterintuitive thinking is the best thing that you can do inside financial markets. If you would ever like to get in contact with me, just go to the YouTube channel to the About section and you can contact me directly by direct message on Twitter at any time. Please be aware of scammers. They impersonate everybody on social media that has an audience and a following. The only things that I'm involved with are these things here. And the concept, if somebody says, hey, I guarantee you this incredible return, or I guarantee you any return, they are a scammer. If it's above market return. And the concept of guaranteed return is just nuts. The only thing guaranteed inside financial markets is risk. An absolute community favorite is Solana. Solana's been trading for nearly 1,200 days. With the CTKS method, we mark up all of that price history. We create those SLs, those Stanfield levels, and let's have a look where they are currently. We can see that just like Bitcoin, we're coming up to some structural resistance levels. But the structural resistance level on Solana is that 33.01. There's one up higher at 33.25. We can see this 33.25 number has been important. Prices come up and tapped it and tapped it and tapped it again. This is going to be a critical line for Solana to overcome. It's really important. When we get above that, the next structural resistance is at 33.75. What you'll understand, if you have the indicator, there's a positive air gap above this particular price. That is really good news for Solana, because in air gaps, things can move up very, very quickly. What about the negative case? Because we always have to understand price is always moving in a wave. if we can't get above this $33 mark, and especially if we can't get above that 33.17 mark, what we're going to do is to see negative price momentum down to the 31.48. Fortunately, we have more layers of support. These structural layers have all different strengths, and that's exhibited in their weight. If they're not very strong, they're very light. If they're very thick like this, that's really good support, especially at that 30.96 level, and we've seen that support get actioned time and time again. Where do you think Solana is heading? Please let me know in the comments. Scammers typically capture people because they say, well, people say, I don't want risk, I don't want risk. But how do you make a return? You make a return through your risk. So if anybody says, I guarantee that you have no risk, they're absolutely nuts. There is no such thing. You make your return through the risk. And what is the risk of the FOMC, the Fed, increasing the federal funds rate, the base interest rate? It is currently 0%. The probability of just holding the rate steady is 98%, and there's a 2% chance of an easing of 25 basis points. This should push the US 2-year, the US 10-year yields down. This should also result in junk bonds coming up, which is a primary risk-on sentiment indicator. That's very good for the main markets. We've seen increasing synchronization between Bitcoin and the indices. So it's also potentially good for the indices. But as far as gold and silver go, there could be a retracement. Always remember, price is always moving in a wave. Therefore, we have to understand what's the economic data. If you pop across to ctksnews.com, go under the Market Analysis tab, you'll see the key macroeconomic data releases. We saw that the PMI, the manufacturing index, came in better than anticipated across the services and manufacturing and also composite indices. That's really good. That shows that manufacturing is picking up. Also, the GDP did incredibly well. The growth inside the US economy is back. The technical definition of a recession is 2 quarters of negative GDP growth. What we're seeing here is a completely different story. GDP is starting to pick up, as is consumer sentiment. So what is coming up in the next couple of days? We can see that the ADP employment change is coming up. JOLTS job openings, the manufacturing PMI, ISM, and in 2 days' time we have the Fed. The Fed is a pretty problematic thing. Markets can get a little bit nutty before the Fed comes out and says what it's doing. So just be aware of incoming volatility, and we also have initial jobless claims. Just keep those things in mind. Non-farm payrolls comes out in 4 days' time. That can move the markets around as well. Around key economic data releases, we tend to get turbulence inside financial markets. That's why it's important to know when they occur. As price is always moving in a wave, we must be prepared to synchronize in with the market. We know we control the trade or investment, but the market controls the return, and the return is always based on our active learning, our knowledge plus our courage. Always know what you're going to do if the market goes down, goes nowhere, or goes up. Warning, this is not an academic exercise. You need to do this with every specific trade that you play and every investment that you place, also your entire portfolio. That means you really have to know where the CTKS structure is inside what you're looking at. And don't just look at that chart. All the charts are intercorrelated and interconnected. Looking across as many charts as possible will give you a phenomenal edge. It's really important to keep positive inside the markets because the markets are really volatile. Risk plays with your fear center. One thing above all, if you want to get rid of risk, learn. Learn as much as you possibly can. You'll either win or learn in financial markets. What we do as a community, we do not blame because it stops our capability to learn. We are the only ones who press buy and the only ones who press sell. Or we don't press buy or sell, as the case may be. Each single participant inside financial markets is an independent player. Everybody has different strengths, different weaknesses, different risk tolerances, different risk horizons, different return horizons. No one piece of advice or information will fit every single person. There's so many different types of traders, like there's so many different types of investors. You must learn. Learn how the markets work. Learn how risk works. Learn how return works. Learn. That's all you can do. And also, always keep positive. Just start small and scale. Go slow to go fast. Life is full of opportunities, and it doesn't matter what happened yesterday. You got burned yesterday? It's not important. Just learn from it. What new rule can you create? Don't blame, because blame stops the learning process. If you don't learn inside financial markets, the markets don't care that you don't learn. They'll just desynchronize you. If you're desynchronized, they'll take your money. If you're synchronized, the market will pay you. It's that simple. That's why being dedicated and committed is incredibly important, and the universe wants you to succeed. But to succeed with positive excellence, not to succeed with negative excellence. History is littered with people who try to take from other people. For example, scammers. Karma is real. Don't do the wrong thing. Do the right thing by yourself and the right thing by other people. Don't think from a position of scarcity. Think from a position of abundance. That's what the CTKS Creed is all about. Have a great day or night ahead, my friends, and Kate and I look forward to catching up with you again tomorrow. Bye for now.